Okay, guys, what is going on? I hope everybody had a great weekend. Last week, we had something interesting happen in what we call the lending world. The prime rate went down by 50 basis points. And I saw a bunch of people jumping on the Facebook, TikTok, whatever you want to call it, the social atmosphere going, man, everything's going to be great. Everything's going to be awesome. Time to go buy a house right now. And I just sat back and I said, well, you know what? There's a lot of misconception out there about what really lowers your mortgage rates. Yes, prime rates went down by 50 basis points. That is absolutely correct. But today, we're going to try and teach you, and I'm going to try to teach myself a little bit about mortgage rates and what really lowers that interest rate for you. Hello, everyone. I am Rob Trigg from Jet Lending. Welcome back to 40 Days and 40 Tips. Today, I want to clear up a common question. What really affects mortgage rates? And what does the prime rate play? And what role does the prime rate play? Many people assume that the prime rate directly influences mortgage rates, but the truth is it's a little bit more complex. So let's break it down. What really affects mortgage rates? Guys, let's pay attention here because this is important. Mortgage rates are primarily influenced by the 10-year Treasury yield. Mortgage lenders look at this yield because it's a key indication of long-term interest rate trends. Why the 10-year? Most 30-year mortgages are typically refinanced or paid off early, averaging somewhere around 7 to 10 years, making the 10-year Treasury bond a more relevant benchmark than a short-term rate. Remember, prime rate only affects the short-term rates. When the 10-year yield drops, mortgage rates tend to follow. When it rises, mortgage rates usually go up. Inflation and economic conditions. Another major factor affecting mortgage rates is inflation. When inflation rises, lenders raise mortgage rates to protect their returns. Inflation reduces the purchasing power of money, and lenders want to ensure they're making enough profit over the life of the loan. So, if inflation is low and the economy is slowing down, mortgage rates tend to decrease as lenders become more competitive to stimulate borrowing. Federal Reserves and monetary policy. Wow, the Fed doesn't directly set mortgage rate. It does play a big role. The Federal Reserve controls the federal funds rate, which is influenced by the overall economy. When the Fed lowers this rate, it's trying to encourage more borrowing and more spending. This can have a rippling effect, lowering mortgage rates over time. That's why last weekend we saw a 25 basis point jump after the announcement in mortgage rates, because it doesn't just happen overnight. Conversely, when the Fed raises the federal fund rate, borrowing becomes more expensive and mortgage rates may rise as well. Global market conditions. Don't forget that global events also impact mortgage rates. Geopolitical instability, changes to global supply chains, and economic shift in major economies can cause uncertainty. Investors flock to safer assets like U.S. Treasury bonds during volatile times, pushing down bond yields, in turn, lowering mortgage rates. What does the prime rate affect? Understanding the prime rate. Now, let's talk a little bit about this. The prime rate is an interest rate that commercial banks charge for their credit-worthy customers and is highly influenced by the federal funds rate. When the Federal Reserve adjusts the federal funds rate, it directly impacts the prime rate. While the prime rate doesn't affect long-term mortgage rate, it does impact other types of loans. Let's go through some scenarios. Loans influenced by the prime rate: home equity line of credit, HELOCs, personal loans, credit cards, small business loans, car loans. These products often have adjustable rates tied directly to the prime rate. So, going back to the small business loan, these products often have adjustable rates tied directly to the prime rate. When the prime rate goes up, interest rates on these loans rise, and when it goes down, they fall. Key differences between mortgage rates and prime rates. Mortgage rates driven by the 10-year Treasury, inflation, and broader economic trends. Mortgage rates are affected by long-term market forces, not directly by the prime rate. Prime rate loans like HELOCs, personal lines of credit, are tied directly to the prime rate, which moves in step with changes in the federal funds rate set by the Federal Reserves. Why this matters for investors? Understanding these differences is crucial for investors. Knowing what drives mortgage rates helps you anticipate when to lock lower rates for long-term financing. On the other hand, keeping an eye on the prime rate is important if you are using HELOCs or other lines of credit for short-term funding. Here's a pro tip for you guys. Watch economic indicators. If you're planning on securing a mortgage, keep an eye on the 10-year Treasury yield and inflation report. These are the best indicators for where mortgage rates are headed. And it's also important to follow the Fed's decisions, as changes to the federal funds rate can signal a shift in a broader economy. Monitoring prime rates for short-term loans. For those using HELOCs and business lines of credit, the prime rate is key. Tracking changes in that will help you. Tracking any changes to the Fed makes to the federal funds rate, anticipates adjustment to the prime rate, and how it'll affect your loan terms. So let's wrap up. Guys, I hope this has been educational for you, because I even had to do a little research on this today myself. So, sum it up, mortgage rates are primarily driven by what? The 10-year Treasury yield, inflation, and overall economy. The prime rate is influenced by the Fed and affects short-term credit products such as HELOCs, personal lines of credit. And understand both helps make you smarter on making financial decisions, whether you're locking in a mortgage rate or using a short-term credit. Guys, if this was helpful, drop your comments and let me know. And I hope it was, because I had to do a little bit of research myself. But at the end of the day, that's what we're here for, is to educate everybody and not have everybody just run amok out there about, hey, that doesn't make sense to me. So for more real estate investing tips and help with your financing, contact me, Rob Trigg at Jet Lending at 903-806-4400. And let's make sure you're ready for whatever the market throws your way. Guys, that's all the times we have today for 40 Days and 40 Tips. Hope to see you guys soon out here.